what will Jackson Hole mean for stocks? Every year, central bankers from across the world meet in beautiful Jackson Hole. And unfortunately for them, fortunately for us traders, they don't get to do all the fun recreational activities and the sightseeing. They do a lot of meeting and then a lot of talking. And this can really correlate to some price action, some volatility across a whole slew of markets. Today, we're going to talk about stocks, get you prepped for what all this means. As this year's theme is structural shifts in the global economy, while that is all well and good for the syllabus creators over in Jackson Hole and the central bankers putting together this symposium, when Fed Chair Powell speaks on Friday, he is going to get some particular questions around the state of the economy in the U.S., around inflation, around the developing China story, maybe around Japanese central bank and their currency getting absolutely annihilated recently. Really anything on the table here for Fed Chair Powell's speech on Friday. And it's coming at a really auspicious time in terms of a bunch of different markets. We have an S&P 500 that, is up really nice on the year, but in August so far, down 5%. We have an interest rate market looking at the 10-year, the benchmark for U.S. interest rates, the 10-year Treasury rate, that is now higher than the recent high that they put in a little under a year ago. Highest interest rate environment here in the U.S. since 2007. So a couple of inflection points here. Is the stock market, is this just a little bit of a correction and they're going to continue to drift higher the rest of the year into 2024? Is this, 4.5% in the 10-year? Is that the high and we're going to normalize from there and kind of rest at around 4%, where I think the market is a lot more comfortable? Or stocks, will they continue to slide? Will interest rates continue to climb? A lot of the goings on in Jackson Hole will be centered around exactly these stories here. As Fed Chair Powell and the U.S. Central Bank, the Federal Reserve, and the central banks globally, they directly affect interest rates in their different regions. And another developing story over the course of the last month here that, you could all but guarantee some reporter will ask Fed Chair Powell this week, where are interest rates going? Is, the 4 and 5% range, is this the high? Or are we going to see more hikes? And in the last month, the probability, the market seeing of another rate hike here in 2023 has gone from 27% to 39%. That might not seem like a lot, but that's a lot. We're edging ever closer to almost a 50-50 split of another rate hike. And you flash back to March, April, and May of this year, and the odds of getting above 5.5%, which is, where another rate hike would put us here in the U.S., were essentially nil. And now, the last central bank meeting here in the U.S., we got to that 5.5% marker, and the market has incrementally over the last month put more and more likelihood into another rate hike. We'll be asked about that, I'm guessing, here when Fed Chair Powell speaks on Friday morning. And we'll also be asked about the main thing that the central bank is meant to monitor and use interest rates to kind of keep in control. Inflation. Is the Fed happy or fearful on inflation? And you might look at this chart here of core CPI, the core inflation measure here in the U.S., and say, hey, we peaked in the latter part of 2022, and we've been moving lower and lower incrementally in terms of this inflation. And if you've listened to Fed Chair Powell's recent speeches, he gave one at a similar type event in Europe a month or so ago, and they're not necessarily afraid of the peak of inflation being seen again, or a resurgence of inflation. They're worried about inflation staying above the 2% target for an extended period of time. Yes, it's headed in the right direction, but at this pace, they'll still be above 2% inflation for well over the next year, as they've only been able to get it down from around 6% to around 5% in the last year or so of interest rate activity. And so the question will become, how fearful are they, or are they happy with the ground they've been able to cover here? And if you've traded any FOMC events in the past, or you've traded the Jackson Hole event in the past, or what have you, you'll know that every word will be dissected. And if he even alludes to being, we actually feel pretty good about inflation. It's headed, if anything as simple as it's headed in the right direction, you might see interest rate projections move lower and the stock market move higher on potentially lower interest rates and lower fear of inflation for the long run. If he alludes to, it's stickier than we thought, or this is going to be a longer thing, a longer battle than we thought, or we might need to hike more than one or two more times. There are more hikes on the table. You might see the reverse of that. Interest rate projections build in higher and stocks see even more bearish activity. Another point that could come up, and this is maybe, if you were to put likelihood of these different topics being broached, you would guess that, someone's going to ask the central banker about interest rates. That's a high likelihood, maybe 80-90% chance of something like that. Inflation, the number one nemesis of central banks, probably 70-80% chance that someone's going to ask that. Maybe less than 50% chance that someone asks about the regional bank crisis. But I think it's definitely on the table. It seems to be one of the greatest vulnerabilities to the U.S. economy at large. As you look at tech stocks like NVIDIA or Apple, that just continue to outperform and perform like there's no kind of inflation fear or global economy fear or financial sector fear. And so this does seem like one of the U.S.'s greatest vulnerabilities, and it has a direct tie to interest rates in the U.S. So could be something like that as well. Are you, when you're making interest rate decisions, are you monitoring the status of some of these regional banks that have gotten into some hot water as a function of higher interest rates? So we'll see about that. Another topic that again might have a lower probability of being broached, but given the global theme of this Jackson Hole Symposium, the China story and Japan's economy also seeing some worse than expected numbers and some downside, as well as Australia, the whole region of Asia and Australia over there, and on this global theme of the week. Will China be asked about, and will Fed Chair Powell, give a confident answer? Oh, we feel that that's, transitory fear and it's siloed off from the U.S. economy. Or if he gives any kind of, we're monitoring the, geopolitical risks of what's going on in Asia and the surrounding region, that could lend to, some volatility across the stock market as well. It's one of these events that, can be really hit or really miss, as anything is on the table here this week in Jackson Hole. But given Fed Chair Powell's speech on Friday morning in particular, make sure that you're ready for that and ready to monitor the stock market. We'll be doing some more content before and after the event.